Hello and welcome. The insurance industry in India is growing rapidly, but some concerns remain, including the low penetration in India. According to the latest Swiss Re Sigma report, the penetration in the life insurance sector reduced from 3.2% to 3% between the years FY 2022 and FY 2023. Even overall, including lives and non-lives, the penetration reduced from 4.2% to 4% over the same period. But the growth story of the insurance sector remains intact. India was ranked the 10th largest insurance market in the world in the year 2022, according to the annual report of the insurance regulator in December, and is expected to become the sixth largest by the year 2032. Among other things, life insurance premiums have grown consistently over the years. Quite in line, HDFC Life Insurance has also shown robust numbers in the 9 months ending December 2023. Its total annual premium equivalent went up 5%, while the new business premium was up 7% YOY. At the same time, the value of new business rose 5%. But that's not all. The assets under management for the company was at 20% growth, and the net profit crossed the 16% mark. So what's the secret behind the growth story in HDFC Life? So today we have with us Vibha Padalkar, MD and CEO of HDFC Life Insurance, who will tell us about some of the secrets of the growth story of the company and also shed light on the way forward for the insurance industry. Let us welcome Vibha. Hi, Vibha. My first question, of course, is about penetration that I was talking about. So, on the one hand, we are, seeing reducing penetration, and on the other hand, we are also seeing that the insurance market is really growing. So, how do you explain this?
So, penetration is usually expressed as a percentage of GDP. So, there's also the denominator as to what is the GDP growth. But if I just were to look at on a standalone basis, there is a fairly large opportunity for insurance, life insurance and health insurance penetration in India. And reason I say this is that larger population is coming into lower middle class and middle class. People are living longer. Also aspiration, the rising middle class, as well as India being amongst the top three in terms of overall GDP amongst all nations. That also means that per capita GDP also, so the percolation of the overall GDP at an individual level will also continue to rise. So the aspirational Indian, the Indian that is beginning to understand value of life insurance, all of that is coming together as a confluence. So opportunity is huge. I think with the right regulation, with the right level of product innovation, more and more affordability, more and more awareness that also both the life insurers as well as the government evangelizes need for insurance. This is kind of the perfect opportunity over the next 5, 7, 10 years for that inflection point to take place, wherein we move towards 2047, 100 years from our independence, wherein every Indian has some level of insurance cover.
So my next question is also about penetration. So some of the people are saying that, insurance penetration went up slightly during the COVID period because, people suddenly became more aware about the, what risk can do to them. But now that those memories are fading and also, the tax norms that have changed for high ticket policies, in fact, the new tax regime makes ATC irrelevant where life insurance policies are covered. So, do you see it as a challenge towards penetration?
Not at all. You're absolutely right that the uptick that we saw in term insurance in the first couple of quarters after the onset of COVID did go up, wherein at HDFC Life, for example, we grew 50%. However, what is noteworthy is that the need for term insurance has not been lost in terms of messaging now that we are out of immediate danger of a pandemic. And so term insurance now, most of the senior companies are growing at a faster clip if not 3x, at least 2x of what their overall company level growth is. And that's a good place to be in. Term insurance is unlikely to go more meteorically. It can in some quarters, but I'm saying over the next 2 to 5 years because of also per capita GDP. So as per capita GDP continues to rise, the need for term insurance. So term insurance is intact. At HDFC Life, for example, in terms of sum assured, because term insurance has a lot higher level of sum assured, in the first 9, we have grown upwards of 50%. So very healthy rates that we are seeing still, and I'm fairly sure that that will continue. Now, in terms of your other point on savings and ATC, there are two parts to this. One is worldwide, some little sweetener due to tax is required, even in amongst the developed countries, even there it is prevalent, because we don't unfortunately wake up and say, I need to protect my family. Right? So you need that nudge, and tax is usually a proxy for that nudge. ATC is not as significant in terms of withdrawal of ATC and moving to the new tax regime, because our ticket sizes are higher. So we're looking at the middle class whose ATC is anyway overcrowded with many, many things. You would have PPF and many other products and ELSS and so on. So what several research reports show, including say a Nielsen report, that the reason for buying insurance due to tax used to be amongst the top 3 reasons. Now it's number 7th or 8th reason why people buy. So tax is less relevant as far as ATC tax is concerned. The other tax that that we went through at the last budget, that was quite significant and continues to be. That is more in terms of Section 1010D. That is it taxable at the time of maturity. That is significant, but not at the entry, which is ATC. Yeah, so I do think that even savings-led insurance is here to stay over the medium to long term. No question about it.
Right. So you've been talking about the growth numbers of HDFC Life on how the number of policies that have been sold went up, etc. Yeah. So what is the secret behind HDFC Life's growth story? Because it has been consistently being on a good track.
Yeah, we are happy that over the last 4 years, we have doubled every metric. And this is in 2 cohorts of 4 years, we have doubled top line, bottom line, quality of business. If you look at our embedded value, assets under management. So that track record has been good. And I think one of the reasons for it is that product innovation. Many things, whether it is in terms of having a deferred annuity products to our flagship Sanchay Plus product, or even in term, we've been talking about term, Click to Protect series, online term. Before term became a household name or talked about by life insurers, we were right out there as being an innovator in that space. So being a product innovator is something that we are known for. Second is in terms of working with over 300 partners. So distribution, no doubt, is important in life insurance, and that's something that we've been working with traditional banks, building our own agency channel, as well as new age ecosystem partners. You have a phone pay and so on. So again, on an entirely end-to-end digital avatar with a seamless, frictionless onboarding for the customer. So the combination of product offering along with making inroads to reach the customer, that's been in a way our secret sauce in terms of growth.
That's great to hear. But you also mentioned that term insurance saw a massive increase during the COVID period in terms of uptake. And when we talk about penetration, it's mostly about protection, as I understand. So that is where I think the role of insurance industry becomes very important in terms of selling term insurance. So what are your views on it, and how can it go forward?
I would wear my pragmatic hat on term insurance. We are in this business to cover risk, and one of the key risks is dying prematurely. Now, to expect us to grow as a country meteorically, it's possible, but then it has its own challenges. So to grow brick by brick, the evolution that I think will work, and that's where we are today, is it starts off small to say, your employer has a term cover. It might be a group term cover. That's fine. So at least you get some cover. Yes, if you were to leave your job, then it could become a little bit difficult, but hopefully you have another one and then you're covered again. So some level of cover you start off with. Next baby steps would be that to that cover, some employers like HDFC Life would say, okay, only your parents are covered. Do you want to add your in-laws at your own, add the premium that you pay? So that might be a hybrid. Thereafter, credit life. So if you're taking a home loan or any other kind of home improvement loan and so on, cover that loan so that if there were to be a calamity, then you're not going to leave liabilities as a legacy for your family. So at least until the loan is there, cover that. So that's now we're at that stage in India wherein that's beginning to do very well. Thereafter, when people see, especially middle class and low middle class people start complaining to say, nothing's going to happen to me, but I'm going to pay all this premium, and they see it as a cost, that the company will make a lot of money without, of course, realizing that anything can happen to any one of us tomorrow, but respecting that sentiment and also respecting the fact that budgets are tight, return of premium could be an option wherein you say nothing's going to happen to you, but in case something happens, then family will get. If nothing happens to you, say at the end of 10 years or 15 years, you will get your premium back. Now that we are at that stage today, wherein people say, okay, let me buy this. And then the final, then there's one more step to say, like a businessman, to say, you know, I have visibility over the next 3-4 years. Uske baad, I'm not a salaried person. So I don't know how I can guarantee that I'll pay for the next 10-15 years, right? So we say, okay, you have visibility over the next 4-5 years. You can have a limited premium paying term. So pay for the next 5 years, but get covered for the next 15 years. So that also is an option. And the last option is, of course, you pay as you go. You pay a regular premium. It will be lower and you pay over a longer period of time. So that's the step-by-step increase in terms of how term insurance will get taken up in India. And at HDFC Life, we don't want to sit in judgment that, you know, this is the only way I can sell term and it needs to be only this avatar. Any avatar wherein an individual has more and more protection is a good story. And so I'm extremely optimistic that from only your employer having, you know, term cover, we are now reaching a stage wherein people are also buying their individual capacity. Credit life to cover loans is no longer an issue. It's almost that people are happy to take it and not leave the liability. So that's why we're nicely moving up the food chain.
Absolutely. Awareness of term insurance is certainly COVID was a big.
Absolutely. Yeah.
But coming to regulations now, you know, the insurance regulator recently, not recently actually, quite some time back, it allowed kind of life or proposed that life insurers can also sell health insurance. What is happening to that proposal?
So as I understand it, it's now part of the draft insurance amendment bill. It also finds a place in the parliamentary standing committee report. And we are hopeful that as the new government is formed and thereafter this should see light of day, wherein maybe it's in the avatar of composite license, that whoever wants to do whatever kinds of insurance you can apply, and some of the regulations will get formed thereafter on some of the nuances of how this will pan out. So we're very supportive of that and also hopeful of this. Now, why do we want to do this? See, we can keep arguing as to who should do this without realizing that the main reason for doing this is customer. If you were to look at the customer today, if I am the customer and I have a overseas mediclaim because I travel abroad, then I have a life insurance policy with a life insurer. I have maybe with a standalone health insurer, I have a mediclaim policy. So my nominee in an unfortunate situation that I fall ill abroad and then I pass away, you will have to go through maybe 4 or 5 different solutions as against one mother policy if I wanted it that way. If I don't want it, then you can unbundle each of these. That is number one. Number two, if you were to look at penetration itself on health insurance, that's less than a percentage. Or if you look at out of pocket, if you're talking about, you know, almost 1/3 or a little bit more is only what is transferred as risk, and 2/3 is still out of pocket. It's a very, very high number. It's something that can set you back by one generation, especially if you've taken a loan to pay off the hospital bills. So both in terms of increasing penetration as well as giving customer a seamless experience and coverage, this makes a lot of sense. As a life insurer, I'm not talking about only playing in the turf of a standalone health company or a general insurance company. I'm saying that I can have many, many avatars of product innovation which don't exist today. That's where I'm interested in. For example, when is a person unwell and when does a person die? And before he dies, when is a person becomes a pensioner? It's all the same person. So if can I give a comprehensive policy like that, a whole life comprehensive policy wherein I'm covering overseas medical, I'm covering standalone, your Mediclaim, I'm covering cancer, cardiac care or major surgeries, I'm covering pension, I'm covering some of the other guaranteed solution and ultimately life insurance in one comprehensive. So let's expand the pie. That's really the intent of doing this, and I'm reasonably hopeful that the insurance bill will hopefully see light of day.
Yeah. So, like, my understanding was that, once life insurers are allowed to sell health insurance, there'll be different health policies that, you will get from, say, HDFC Life.
Yeah.
Like you mentioned also, like if I'm a customer, I have to go to only one company for my life insurance solution as well as health insurance solution.
Yeah.
But you're also talking about a comprehensive policy.
Yeah.
So will there be both options? And
yeah, absolutely. I think it will be free market. It will be that supposing a person already has enough of life cover and they might not be looking to switch their into another comprehensive cover because they've already bought it many years ago and they're happy with it. They just need to top up their Mediclaim, or now their family has expanded and they want a bigger Mediclaim cover for their group meaning as a family floater. Then they might just want to buy that. Somebody else might be buying for the first time and say, very low in terms of administrative hassle, and they would say, give me one-stop shop. I can't really handle too many things. I lead a very busy lifestyle. So that person might want a comprehensive cover. So different options will be available so that people at least get covered.
But I'm wondering that health insurance itself, sometimes, a lot of people don't understand a lot of jargons because there are exclusions, there are supplements, pre-existing diseases. So comprehensive policy, of course, it is giving, like you said, that all kinds of benefits. But do you think the the complication of the policy also increases along with that, and how will this be ensured that the customer copes up with that?
So frankly, today it's like a puzzle, and only one small piece that is missing today is indemnity, health indemnity. Even today, we have policies that cover cancer, cardiac, and so on, cover long-term, like kind of a post-retirement guarantee, and cover life insurance, and that's doing very well. Maybe 40% of our business is some avatar of this kind of solutions today, wherein people are fairly aware that they can claim. There could be health riders which we could attach, like a cancer care rider. So it exists today, and it is this piece that we can add to our policies. I think don't see it as being a very big paradigm shift. It is more in terms of a customer-centric product, and don't see complexity as being an issue at all.
That would be great if your life insurance
in one stop.
Not complicated for the customer. I think that will be
absolutely. I think moving away from complexity for the customer is something that many of us are trying to solve for. Complexity, like in technology, has to be behind your handheld, and not it should be very, very simple from a UI UX experience. Same thing for our products. It needs to be very simple, intuitive, and it should be solving a particular need and not just something very esoteric. That's what we strive for on a daily basis.
So coming to the surrender charge regulation that the regulator came out with to increase the surrender charge. In fact, surrender charges have been a challenge because every company perhaps has a different formula of calculating the surrender charge. So even as a journalist who's been doing this for 25 years, if somebody were to ask me to calculate, and take some time, we need a lot of this thing. So do you also think that this move will lead to simplifying of the whole process of surrender and standardizing it?
So even today, the guaranteed surrender value (GSV) is standardized. There are companies, say like HDFC Life, that give a higher level of surrender, which is your SSV, your special surrender value, which is left to the individual companies. I want to actually focus on why did the regulator want to do this. Possibly because of missale complaints, possibly because of poorer levels of persistency. Not so much for us because we're comfortably after above 90%, but maybe for some companies. So I think that's what we need to address. Reason is there is a lot of heavy lifting behind the scenes to construct a product like this because we're giving long-term guarantees. By saying that whoever wants to change their mind, let us give the money back, great, but we will kill the product. The reason we will kill the product is for us to be able to give guarantees, we have to lock in at long-term bonds, long tenured bonds, as well as have hedging instruments behind the scene. This could potentially, if this starts panning out in large numbers, say there's a sharp interest rate movement, then people might be induced to surrender to move into another policy. And many such other things which could result in a capital call for the sector and so on. There is no point in destroying a good product because most of the people who stay back want that long-term guarantee, which is almost like a first salary after retirement on the day of your retirement, right, and continues into the future. No other instrument gives a product like this other than a life insurance product, and there's a lot of capital requirement to be able to give a guarantee like this. So our limited point, along with peers, my peers in the industry, is that let's try and address, if mis-selling is a problem, let's address mis-selling. Let's make it very, very clear that to the customer that after the first year, there is not going to be liquidity because this product is meant for a long-term guaranteed product. A lot of other competing instruments don't give this guarantee, but give liquidity, right? So different objectives. So if you want liquidity, please buy another product, not this product. I think that is what we need to do more of rather than changing the contours of the product, which will make it very unattractive.
Absolutely. So mis-selling is about, when media also talks about it, it's mostly about the way agents project a certain.
Absolutely. So, upfront, put it down, maybe in very simple language to say there will be no surrender, zero surrender value. Maybe illustration will have to show that there's zero surrender value. Maybe the product will have to be recorded as a sale so that the customer also really understands that this is for a different objective than giving liquidity. But down the line, liquidity does emerge because you can borrow against it. You can get an over-the-counter loan in case there is some stress on one's cash flow, then one can get a temporary over-the-counter loan against this.
The regulator also mentioned, I'm just mentioning so many questions are on regulation because there have been a lot of changes under the current chairman. So recently he spoke about individual risk profiling when, fixing premiums, because we also see that in insurance, sometimes it's an age band. And even if you're healthy, your premium goes up. It's about health insurance, of course, like it's fixed. But what do you think about that? What is the idea behind this?
With it increasing by age?
I mean, how will individual risk profiling help?
See, the cornerstone of individual risk profiling is that currently underwriting happens at an overall macro level, which means younger people are subsidizing older people, or people with compromised lives for whatever reason are again being subsidized by people who are leading healthy lives. So can we make it more nuanced to say that if a person is young and has never been to a hospital, never probably even caught a cold of any seriousness, that person should get a very, very attractive, not just price, but also frictionless onboarding. Almost to say 2 clicks, make the payment, you're on, you're covered. We need to have some of this paradigm changing behavior both by the manufacturer, which is us, the distributor, the technology and data environment to enable us to get there. And Bima Sugam is trying to perhaps move in that direction, wherein us as a manufacturer who would be on the Bima Sugam platform would hopefully, with the customer consent or prospective's consent, be able to ping to say exactly this, that I am a young policy holder and I've never been hospitalized. If I as a manufacturer, I can have cite and corroborate through government database that this person is indeed what he's saying is right, then I can give a very differential experience to that person. At the same time, we also need to cover the other end of the spectrum, and I'm very cognizant of that. Whether in terms of older ages, whether in terms of cancer survivors, whether in terms of bottom of the pyramid. And that's why the nuanced underwriting will start helping us look at cohorts, how different cohorts are panning out on mortality experience and so on, and for us to be able to increase and expand insurance penetration rather than today at a very high level that we do underwriting, and that's holding back to some extent.
So how do you think the insurance industry can really help seniors? Because you mentioned that, and I was also thinking about that because, they are in a age group which is more vulnerable, probably with the So what solutions can the industry provide them in terms of innovations, data?
I do believe that the way forward on many of these different cohorts and retirement solution comes right up there is through a platform. And let me explain. What I mean is, right now I would engage with a senior citizen at a policy level to say, I think you should buy this policy, which is an annuity policy or a joint life policy. However, the senior citizen or to be senior citizen is looking for solutions to say that, where can I go to buy some things that will be senior citizen. It could be medicine, senior citizen, or it could be other apparatus, because if that person is mobility impaired, where can I get this? Does India import such very nuanced equipment, post your hip replacement surgery or whatever it might be? Because they're hearing about it on social media but don't know where to access that. Where can I borrow? For example, I need a specialized wheelchair, but I need it only for 6 months. I don't need to spend 2 lakh of rupees on a wheelchair that I don't need after 6 months. Is there a place I can hire one? Very, very practical aspects like this. That is really that ecosystem. Another one is social networks that, my kids have gone abroad or kids have gone to another state. I don't know anybody here, so, but I like, say, a hobby. It could be dancing or a calligraphy. How do I find other networks in the city or town I live? So how do we put them in touch to make them socially relevant? And hence, otherwise they start becoming the government's problem down the line. So how do we develop this kind of an ecosystem? And with that kernel of the idea, that's how what you see, apart from composite insurance, there's a very interesting aspect in the draft insurance amendment bill, which talks about insurance companies being allowed to invest in insurtech companies. So there's a lot of work, interesting work being done by insurtech companies exactly in this, wherein they're building platforms, wherein even things like 101 of iPhone usage or Android usage for a senior citizen. Now, all of us at home know that it's becoming almost center of what we do and how we do it, for them to be connected with their grandkids, for them to be able to send messages or photos or listen to podcasts or hail a cab. So 101 of this, very simple, bigger font, maybe local language, and so on. But this is being done isolated, but it's done by a lot of digital native platforms. If we can invest in it, we can provide growth capital, and then we'll stop having a conversation only about a particular policy, and we will start engaging with the senior citizen community, which will start helping expand the pie in terms of realization of products to cover their risk.
Yeah, great. Actually, we are coming up with another retirement event very soon, and we were thinking of integrating these HTech and
yeah.
So, but my question is that with the bigger insurers, also get into this insurtech thing? There'll be tie-ups, and how do you see the industry, expanding if this?
Hugely. I can tell you that at HDFC Life today, we see this as a very big opportunity as well as the right direction. So it's not only opportunistic from a growth or profitability perspective, but I think that our hooks into a particular community will be a lot more because it will be more relevant. So I do see a lot of partnership. Reason I'm saying partnership is, as an insurer, I'm not allowed to do anything other than sell insurance policies, right? But if I'm allowed to have a partnership with somebody or being an investor in a long-term growth story with a insurtech or a fintech, then I can provide two things. I can provide the capital and I can provide experience of my underwriting and customers. And they can provide the idea, technology, UI, UX, and so on.
So there has to be a seamless handshake.
Absolutely. Seamless handshake wherein we partner for the long term. And continue to course correct, because we will need to do that as to what is relevant for the senior citizen, what are they looking for. And there are many communities. I talked about senior citizen. Another cohort could be millennials on the other spectrum, right? To say, why are lesser and lesser millennials interested in talking to a lot of our distribution partners? Because they find it very painful maybe to onboard, too much of paper, too much of data, too much of hurdles, and they'll say, I'm healthy, why are you making me go for all these tests, right? So how do we solve for the other end of the spectrum? How do we use retina scan? How do we use other proxies for diabetes, for cardiac, and so on, so that you say, I don't need anything from you. If you are this bank's customers, then I have everything. You've already done your KYC. Your XYZ in terms of your vital stats, and I don't need, you just have to choose the policy and make the payment and you're covered from tomorrow, right? How do we solve for that other end of the spectrum? So many such large cohorts of people and augur very well through this partnership between large manufacturers like us along with insurtechs.
Right. So you have addressed, part of the answer of my next question, but I'll still ask you that question coming to the end of this interview. That what do you see as the way forward for the insurance industry? And really, do you think that goal of insurance for all by 2047 is achievable?
So I'm a huge optimist for the prospects of insurance in India. Our regulator has been extremely supportive in many, many things, whether it is looking at allowing us to use and file instead of file and use, or looking at moving towards risk-based capital or open architecture, or looking at expense of management, looking at relaxation of sandbox, and many such things, and many more in the pipeline. So I do believe that the future is bright. If I were to deconstruct in terms of savings in India, about 50% give or take, 50% goes into physical and 50% into financial savings products. Of what flows into financial savings products, about 17-18% has been consistently moving into life insurance solutions. Right? So I don't see why that should be different. It should just increase as awareness and per capita GDP, like we talked about, that starts going up. And that translates to growth, double digit growth for the sector, and we should grow slightly faster than the sector. So that's how I see it in terms of opportunity. And this is without taking into account some of the big ticket items like we talked about on the insurance amendment bill, or any other such innovation that we are permitted to do, which can be a step change on how people see, understand insurance, and ultimately buy insurance. So I'm a big believer of this space, and hence insurance by 2047 is not a tall ask. See, if you were to look at the number of policies that are currently in existence, about 67 odd crore policies, and usme se, if you look at about number of policies per individual, it's about 1.2 policies per person. That translates to about 35 odd crore of Indians who can afford to buy insurance, who bought some insurance, right? Now that, if I were to look at what will that 35 odd crores take to double over a 15-year period from now till 2047, that works out to a CAGR of less than around 5%, which is not a tall ask at all. So when I just deconstruct this, it should start moving upwards to that. It should only grow faster. Plus Bima Vistar and Bima Sugam, PMJJ, all the Pradhan Mantri schemes will mean even the bottom of the pyramid, it starts percolating down. So I see that this is not an unreasonable target for all of us to achieve.
Okay. Thank you so much, Vibha, for this forward-looking conversation and to take up time for this interview with Outlook Money. And those who think insurance is boring really need to think again, because we had a really interesting conversation today that can help you plan a strategy for insurance even in the future. Thank you so much.